Video control. Perfect. All right, thanks for joining me, guys. Again, thanks for joining on Labor Day weekend. I completely forgot that it is Labor Day weekend. But whatever. It shows you guys' dedication and you want to learn about this stuff. So today's class is going to build on last week's class, or maybe it was 2 weeks ago. Trend trading and market structure and spotting reversals. I didn't go over nearly as much as I wanted to in that class, so I figured I would do a part two. So today we're going to do a market structure refresher. It is highly recommended that after this class, if you haven't watched the first class on my YouTube, go ahead and give that a watch because it's going to go hand in hand with Fuel Swim. So we'll do a quick market structure refresher. We're going to go over some trend trading setups. There's only going to be one new trend trading setup because today I want to focus on the reversal setups. Because that's kind of where the big money is made on the reversals. And I want to get you guys equipped on how to spot them and how to trade them. Not only that, but if you're good at it, the reversal trades are some of the safest trades you can take. And hands down, give you the best risk to reward. You just got to be disciplined and know how to spot them and trade them correctly. All right, let's go ahead and trade. So let's do a quick refresher here. The market either ranges, it either uptrends or it downtrends on all time frames, right? Whether it be the 1 minute, 3 minute, 1 hour, 2 hour, 4 hour, weekly, all that stuff, right? Here on the right, we see forward weekly, in an uptrend, in a downtrend, and then ranging, right? So you can see right here, all three market conditions in one, right? And we consolidated here too, and we kind of broke out, but we just ended up staying in our range, right? So right now, forward is ranging. So what you want to do as a trader is identify the market conditions and trade with the trend, right? An uptrend is right here defined by a series of higher highs and lower lows, as you can see right here on NASDAQ on the 4 hour. We keep getting these lower highs, right? Higher lows. I'm sorry. Higher low, higher low, higher low, higher low, higher high, higher high. And we just keep doing it like this, right, until the trend's over. Downtrend, same thing. Lower highs, right? Lower low, high, low, lower high, over and over until it stops, right? Ranging is when we consistently fail to make new highs and new lows. When we're in a ranging market, if we start ranging for too long, that is kind of a recipe for a reversal. So that is something I'm always looking at. When we start consolidating and ranging, I am actually paying the most attention because that's when the candlestick, that's when market structure starts to shift and the candlesticks are going to tell you that we're about to reverse. Even on here on NQ, you see us ranging on the 30-minute, consistently failing to make new highs or lows. But once we finally do, right here, break all this support, and then come up here and fail to hit all this resistance, we start dumping, right? So when we're ranging, me personally, I am paying the most attention because I know that that we're about to make a big move, most likely to the downside or upside if we're in that trend, right? And again, here is futures on the 3-minute, just to show you guys that this market structure thing is happening on all time frames. Here's in an uptrend, we shoot up, and then we start a downtrend. We start failing to make new highs, and then we just start ranging, right? We're ranging until we break the range and start an uptrend again. So again, market's always doing 3 things: uptrending, downtrending, ranging. All right. Any questions on that? All right, sounds good, guys. Okay. Cool. So we're gonna go over mine. This is the one that I didn't go over on the last class, and this is the one that I wanted to go over the most. This is my favorite trend trading strategy. This is a volume strategy. If you're a beginner at volume, this is the volume strategy that you should start with. Its hit rate is it's got to be in the 90s. I love this setup, right? So let's start. The market is in a clear trend, right? it's in an uptrend or it's in a downtrend, and we're looking for the momentum to slow down. That momentum slowing down is just people taking profits, right? God, it's key for you to understand that not every pullback is a reversal. A lot of pullbacks is just people like you and me taking our profit, right? Um, so during this profit taking, the market pulls back and it's going to start consolidating on low volume, right? This is going to indicate that profit taking has started, and people like you and me who have not joined the trend yet, we're starting to take a position to join the trend. So this is going to be your entry. When you start seeing us consolidating on low volume, you go ahead and take your entry and you wait, right? And your stop loss is going to be the previous swing low or an EMA of your choosing. I personally don't like using an EMA for this strategy because the EMAs tend to go sideways. But if you use maybe like a 21 or a 20, like a longer time frame EMA, I could totally see that being your stop loss. Put simply, it's a bull flag or bear flag on low volume. A bull flag or bear flag on low volume, that's going to be your clue that the move is going to either continue or the move is going to continue rather than reverse. So you see us consolidating to the side on low volume. It's more likely than not the move is going to continue. But on the other hand, if the volume on the trend is beginning to decrease, say we're in an uptrend and the volume on the uptrend is starting to decrease, and the volume on the consolidation is starting to increase, say the red candles on the consolidation are having more volume than the buy candles, that's a big clue right there. Pay attention to that. Pay attention to the volume. Match up your volume with your candlesticks, right? So if we're in an uptrend or a downtrend, the volume is increasing there. The next consolidation, if the buy volume on a downtrend is starting to increase, then that's going to be your first clue right there. Before even the new swing low or swing high is made, that the market is about to reverse, right? This is a little different. This is how I personally interpret volume. Pay attention to the volume, match it up with the candlesticks, right? So say we're in an uptrend and a lot of bearish volume comes in. A lot of bearish volume starts to come in, and we get a huge candle, right? A huge candle to the downside. But all this bearish volume came in, and the huge candle to the downside didn't really break any meaningful support, then you're most likely facing a temporary sell-off. That's going to be an opportunity for you to get in. If you notice that we just sold off on this candle came out of nowhere, it's on really tiny volume, more often than not, that candlestick is going to reverse in the very next candlestick. Um, so this is actually my very favorite candlestick volume combo. It's a doji at the top or bottom of an uptrend or downtrend. So we're in an uptrend, we start getting 2 or 3 dojis in a row, and it's a really low volume on the dojis. I'll fade that move. I'll go ahead and take a short right there because a doji signifies indecision. But if we're in an uptrend and it's signifying indecision and there's low volume, then more likely than not that decision is going to be less reverse because there's not enough volume here to go ahead and break highs. This is a way for you can take advantage of this. Like if you are trading in a market that you know is low volume and we start breaking towards high or low of day, you can go ahead and fade that move knowing that there's not enough volume to break this high or low, right? Just go ahead and fade that move. Make your stop loss the swing low or the swing high. Next slide is going to be a chart. Going over what we just talked about. Any questions real quick? All right, I'm going to move on here. All right. So this is a few examples of a low volume pullback. Actually. So hold on a second, guys. I'm going to go ahead and mute everybody, but if you have a question or anything, go ahead and unmute yourself. And I highly encourage you unmuting yourself if you have any questions. So right here, we see that SPY is in a clear uptrend, right? Notice the volume on the uptrend is large, right? You see the volume is increasing on the uptrend, right? You see that? Now, here's our first consolidation, 3, 6, 9, almost 10 minutes of consolidation. Match that consolidation up with the volume. You see how this volume is much lower than this buy volume? That's indicating that all this is just profit taking. It's just profit taking and people taking a position to join the trend or try to fade the move. Um, which I don't know. I don't see any bearish signs here simply because of the volume. If I was in this if I was about to make a trade here, I wouldn't fade this move because I would come down, look at the volume, and say this is just a low volume pullback. That's exactly what happened, right? Now look, bang. Here's the candle. Here's the buying volume stick that came out of this candlestick, right? And now we start consolidating again. Look what happens. Really low volume on the sell-off, right? So that's two low volume pullback entries. And now we start going up again. We start going up again. We start going up again. Volume, we kind of gapped up here. So I don't know what to make of this. I've never seen a gap up in a 3 minute, but we come up here and then bang, this big bearish volume stick comes in. I'm sorry, this big bearish candlestick comes in. But look at the volume. So we did get a big bearish candlestick and big bearish volume, but this bearish volume failed to break any meaningful support. You guys see that? You see how this big volume failed to break any of this? And this is the most bearish volume that came in damn near all day. You see that? So if this is the biggest bearish volume stick that came in all day and it failed to break any sort of support, then that should tell you that this sell-off is fake and the trend is likely to continue. You guys see that? And again, and you take that entry, you take your entry and you just wait and you're good to go. I believe we just trended all day. So that's 3 low volume entries. This right here, this is my favorite setup of all time. I take this setup like 10 times out of 10. It's beautiful. It's price action and volume matching up, so it's a beautiful thing. Volume is an indicator that doesn't lag. I will have a class going more in depth on volume, but if you're a volume beginner, I think that this setup right here is going to be a good way for you to start. Don't even trade it, just look for it first. Look for it. Once you start seeing it over and over 5, 10 times, then start trading it. I'm already to the point where I definitely trade the low volume pullback. It is my favorite setup of all time. And I'm gonna keep trading it. Its hit rate is like, man, I don't know. I don't even know the last time it's failed me, to be honest. Like the low volume pullback is beautiful. All right, so let's go ahead and move on. Any questions on the low volume pullback? Get this bad boy real quick. Really, really good stuff, man. It's orange sherbet I just got. So good. Let's go ahead and move on. Oh, I forgot to take these slides out. Okay. These are the slides from the last class. We can just go over them real quick. So this is uptrend. This is an uptrend example, right? And how you could get in. So if you guys know me, I use the Fibonacci a lot. I'm gonna go over this really quick. I gotta take the slides out. So I draw the Fibonacci. So we're in an uptrend, right? I would draw the Fibonacci from the low to the high and wait for a pullback to one of these levels, right? The 0.5, the 0.618, or the 0.786. I would get in here. I would definitely get in here on the retest of the 618. And yeah, I would try to get in anywhere right here. So I recognize that we're in an uptrend, right? And I would get in on this Fibonacci retracement. If I miss the Fibonacci retracement, another entry for me is right here, the pullback to this EMA. This is another entry that I would take if I can see that we're in a clear uptrend, if volume is there. And, market structure says that we're about to go up. If I see that we're holding lows and breaking resistances, that's definitely a setup I would take. And then my stop loss does that EMA. So we're coming up, we're coming up, we're coming up, we come down. So this downtrend here fails to break any of these supports. So I'm assuming the uptrend is still going, and then we double bottom, right? You can go ahead and place an entry right there, recognizing that we double bottom. Not only that, but we also printed a morning star, right? On the 3 minute. This is the 3 minute time frame. You can honestly, if you're a day trader, I'm a day trader. So this is all day trading strategies. You can use this on any time frame. I personally just use a 3-minute and a 5-minute for my day trading, and the 15 as well, right? So double bottom, here's your entry to get in on the trend. We're going up, we're going up. Here's the break. This is another A plus entry for me. When we break out of a zone and we come down and retest it, that's another entry for me to go ahead and take it off, right? All right, let's go ahead and move on to the next slide. Any questions on these long setups? I know I'm going a little faster here, but I wanted to get to the reversals. All right, looks good. All right, so downtrend, real quick. Just a quick refresher. We're in a downtrend, right? So we're in a downtrend. Here's a pullback to an EMA. Here's an EMA entry. Pull back to an EMA. Make your EMA your stop loss and go ahead and ride your EMA all the way down until we go above it or we cross, right? Another entry is we're in a downtrend. You go ahead and pull out your Fibonacci tool and draw it from the swing high to the swing low of the day. And you wait for price to make a retracement to the 618. Now you can see here that price gave you multiple entries on the 618. What do you see here? Multiple failures to make new highs. That's a clue right there. And we're going to get more into that here shortly, right? So here's a break of the zone, and now we're retesting the zone. Here's a break and retest of the zone entry. Bang, just like that. So again, you see that we're in a downtrend. There's plenty of opportunities for you to get into the downtrend. You know, you don't got to fade the move. You recognize the market conditions that we're in. We're in a downtrend. Don't try to fade the move until it makes itself obvious. And we're gonna go over how it makes it so obvious right now. All right, perfect. So this is actually where the PowerPoint cut off last time, and I wanted to go off more of this stuff. So how to spot and trade reversals. This is something that I do a lot. So you want to take a reversal position after price fails to make a new high or a new low multiple times. The other day, I tried this off of one failure to make new highs, and I got burned right away. So it's important for you to make sure that there are multiple attempts at making new highs before you go ahead and take your entry. Every red line is a potential entry, just risking the previous swing high. But I personally want to see 2 or 3 touches or 2 or 3 attempts at making a new high before going ahead and take my reversal position, right? So every red line, you can see that we keep failing to make new highs, right? This to me is an A plus entry because we broke out of the zone. We are now clearly in a downtrend because we keep failing to make new highs. And you can go ahead and take your entry, risking any of these previous swing highs, and go ahead and enjoy your gains. On this reversal strategy, your stop loss is always going to be the previous swing high. You got to hold it. It's going to get volatile because it's a reversal, and bulls or bears don't want it to reverse, so it does get volatile. You got to trust that market structure has your back. You got to trust that we might be pulling back here, but if we're pulling back and we fail to break a swing high, then I'm going to stay in the position. In fact, I might even add to it. I mean, I'm starting to add to my futures positions on pullbacks because, if I see us pulling back and we fail to make a swing, we fail to break a higher low, I'm just going to add because, on futures, it's easy to buy the dip, right? So a wick above the highs, it doesn't invalidate your trade. You want to look for a candle close above the swing high, okay? So you can definitely wick up there and get rejected. And you can see it right here as well. This kind of wicked up to here. And that, to me, doesn't invalidate the short setup because all it was a wick, right? And that applies, again, to every time frame, right? Still, the fun part. A reversal example on SPY prints. This is one that I took. Let's see, I believe this is my entry right here. But every black line is a potential entry. Let's go ahead and walk through it. So, draw our attention over here to the left. You see that SPY is in an uptrend and it is in resistance. This black box right here is resistance. So right here is the swing high. We come down and here's a push up and we fail to make it the high. Okay, it's SPY. It probably wants more of a pullback. We come down, we push up, again, we fail to make a new high. It's whatever, we're still holding support. We come down, we wick down to support. You see that? Support is always tested on these wicks right here, they're always tested, right? You see we come down, hold support, right? So we come down and we come up, and again, we come up and we fail to make a new swing high again. Now that we've broken support right here, this is a very good entry, just risking the previous swing high, because now there's 1, 2, 3, 4, 5 attempts at making a new swing high, and it just keeps failing. The buyers keep getting stuck, right? And we come down again, saying again, we fail to make new highs. You see that? And now we start consolidating. We make a push up here. And this is why I mean a wick doesn't invalidate your short setup, because see, we wicked above this resistance here, but ultimately we failed to close above it, and the trade kept going in our favor, right? Now we come down, we finally catch support. Now on this push up, what we want to see is all these resistances get broken, right? So we're pushing up. This resistance is broken. All right, that's cool. We're pushing up. And now we slam into this resistance. It doesn't really get broken, but it's okay. What we want to see now is price come down and hold any of these candles, right? If it comes down and holds any of these candles, then the uptrend is still intact, right? So that's exactly what happens. We come down, these candles hold, right? These candles hold. Somewhere around here, this holds. This becomes the new swing low. So now we come up. What we want to see now is price come up and break this swing high, some of this support. I'm sorry, some of this resistance. But we come up and we fail, right? Now this is your clue that the downtrend is about to continue, because on this next push up, what we want to see happen is more resistance break, and it just fails. All this resistance up here, it just fails to do it. Downtrend continues. There's no reason for you to chase this, right? Because you want to see this support hold now. So say we fail to break resistance, that's fine. Maybe it just wants to pull back again so it can break. So on the pullback, what you want to see is this swing low hold. If this swing low doesn't hold, then that's another clue that the downtrend is about to continue. And then that's exactly what happens. We come up, we fail to make a new high, and then we just keep going. So you see every black line, every failed attempt to make a new high is a potential short entry. So that is how you can top tip the market, right? You see that we're in an uptrend, and we just start failing to break these highs over and over again. These things start on the smaller time frame. So that's that's why I'm trying to show you guys that this is a 3 minute, and it happens on all time frames. It'll happen on the daily, the weekly, the hourly. If you're a day trader, you'll see on the 1 minute, you'll see on the 5 minute. And you can trade these on any time frame just like this. This right here is the essence of price action trading. It's recognizing that, okay, now we're coming up and we're failing to make highs, or we're failing to break these distances. All you really sometimes need are just these lines to trade. You can make it as simple as that. Understanding market structure. It's really that simple. Any examples on the spot? I'm sorry, any examples? Any questions on the SPY puts? On the SPY put setups? We got more setups for you guys too, so no worries. I think we're good. So now we're going to go over ES longs. You can also do this on SPY calls. I just flipped over the ES chart and I just decided to do ES. You can also imagine this is SPY. So we are in a downtrend. I'm going to draw your attention to over here, right? So we're consolidating and we're officially in a downtrend because we come up here and we just failed to hold all this support right here off this one candle. We are in a downtrend. So we're coming up and we just keep failing to make highs. And here's our first meaningful push up. On this push up, we want to see this previous swing high break, but it fails to, right? So we're still in a downtrend. Downtrending. You see, we keep failing to make new highs. Push up, failure. Keep going, push up, failure. Keep going, push up, failure, right? Keep going. Now, this is where things start getting interesting. So this is our range now, right? We are retracing. So this is the swing high. This is the swing low. We come up. We come up. We're coming up. Now, this held right here. We came down and we held this. You see that? Now, we come up, and here's when we break this support. This is your first clue that the market wants to reverse out of this downtrend now, right? Because here's the first swing high that broke on a push up. Now we're pushing up, bang. This swing high broke now too, right? We're coming up, and as expected, you see that right here? This, where we first sold off at, it's getting tested. So on this push down, if this downtrend is to remain intact, on the push down, we need to start seeing these supports break. But instead, we come down, and now this becomes our support. That's your second clue that price is ready to reverse here, because this sell-off only led us to our support. Now here's our new range, right? We ripped through it, ripped through it, ripped through it. And this is right here is my A plus entry. I back tested this and I couldn't get a 0.5 fill on any of these entries right here. It wasn't until it made this move that price came down, held support, held the 618. That is when I would get in right there. Bang. And then we go ahead and push on up, right? Slam through this resistance. And now this becomes the new swing low. And as you can see, it never touches and we just keep going up. So that right there, guys, is the basics of market structure and how you can use your understanding of market structure to get your reversal trades. You know, you wonder how I'm catching all these reversals. It's because I'm paying attention to these really small shifts in market structure that are happening on the smaller time frames first before they happen on the bigger time frames. They're happening here, right? They're happening on the 3-minute. That is why me as a day trader, I'm always paying attention to these subtle shifts in market structure. You know, I'm always I don't draw these red lines when I'm trading. I just kind of see it in my mind's eye, if that makes sense. But I highly encourage you guys to start marking off your swing lows and swing highs and start seeing what happens when they break or hold or become retested. And you'll start to see that, oh man, the market has actually been telling me what it wants to do this whole time. I just needed to understand the language it's speaking. This is just how the market speaks to you, guys. This is just how the market speaks to you. It's telling you, hey, I'm breaking these supports. I want to go up now. I'm holding these supports now. I want to go up now. Or vice versa. Hey, I'm breaking these supports. I want to go down now. I'm breaking, I can't break these resistances now. So I want to go down. These subtle shifts in market structure, they happen no matter what time frame you trade. You can trade them on any time frame. Me personally, I trade on the 3-minute because I'm a day trader and I like to be flat going into the next day. So I'm always on the 3-minute or 5-minute. You guys see me trade 3 and 5-minute roughly, or at the same time. So any questions on your entries on this ES long? And yeah, exactly, guys. I forgot to say this, but every red line, every new swing low, if you just trade market structure, if you just trade these red lines, those are all potential entries, right? These are all potential entries for you guys. As soon as these hold or break, they all become potential entries with your stop loss being the previous swing low. So that's another reason why these reversal trades can present some of the best risk to reward trades out there rather than the trend trades, because you kind of got to pay more attention to the trend on when the trend is going to be exhausted, whereas you don't got to pay as much attention to a reversal because your stop loss is so tight at that point. You can just risk lower day or higher day or this swing low or this swing high. You know what I mean? So that's why I think the reversal trades are actually some of the best risk to reward trades out there. But it's up to you to realize to use the things that you've learned during this class to recognize that this is a real reversal and not just a pullback. It's not just profit taking. You can't be the guy that buys puts on every pullback because red candle puts time. You can't be the person that buys calls on every green candle because we're in a downtrend, but here's the first green candle, so we're going up. You got to be the person that listens to the market, that understands the market's language and says, okay, now we're going up. Let's go ahead and take a position. Now we're going down. Let's go ahead and take a position, right? Okay, so I'm going to go ahead and move on. I believe I have another trade. Another ES longs entry, and this time we're going to have volume involved, guys. So let's go ahead and start. Wow, this is a crazy, crazy day. So we come up here. I'm gonna draw your attention to the left, right? We're consolidating, we're consolidating, we're consolidating. And bang, we shut up right into resistance, and we start selling off really, really hard, right? And notice the volume on the sell-off. This is a pretty high volume, right? Now, on this sell-off, here's the first green candle. Here's the volume candle with this green candle. Now, the reason I say to match the volume up with the candlestick, look at the candlestick and look at the volume. Look at this candlestick that broke all this meaningful resistance. This is the most buying volume that came in all day. Look how it's bigger than all this selling volume. Not only that, but this volume candlestick also broke all this price action, right? Right? Isn't that pretty cool? So we're coming up, and here's your first clue that this is a sustained uptrend because we come up and this sell-off is just on really low volume, right? We come down and look at the sell-off volume. So this right here is a potential entry for you, knowing that this volume stick right here broke all this selling volume, right? And not only that, but the candlestick with the volume stick broke all this resistance. You see that? That's why I really like volume because it's not a lagging indicator. It's happening in real time. When I see a volume stick like this and a candlestick like this, that tells me that we're about to reverse. And now we pull back, we hold this support, the volume, I mean, our attention right there, the volume, you see on the sell-off, the volume is really low compared to all this buying volume. And now look what happens on the buying volume. It dwarfs all the selling volume. And it happens over and over. You see this huge sell-off right here? Here's the volume that corresponds with it. You see it's tinier than all the buying volume, and it's really just tiny overall until finally we come down to the 0.5 to the lowest volume stick there is, and that becomes an entry for you. That's definitely an entry for me, and it should be an entry for you because now we held all this support, and we come here, we're holding this support, and now we break this range and we just trend up for the rest of the day. I believe this is the day that we just had a random sell off and then we just sold off. I'm sorry, we just rallied for the rest of the day all the way to highs. So this right here on the 3 minute, it was telling you, it's giving you all these clues that hey, we did sell off, but now I want to start going up because we're holding support. The selling volume on the sells is really low. Um, wow, over and over, guys. Like every time we sell off, look at this consolidation. This is the A plus setup right here. This consolidation right here on a really low volume, that is a beautiful entry right there. And then bang, right there, that red line right there, potential entry for you. And then look, you see the volume increase on the buys. So that is just a combination of market structure and volume. So you don't even really need volume. All you can use is market structure. But me personally, I use volume because that signifies to me that the move is real. It tells me what's going on behind the scenes. If the volume is low on this pullback, that means that people are just taking profit and the buyers are here. They're not going to let it sell off anymore, right? Um, yeah. Are there any questions on the low volume pullback setups here? I know the volume ones are a little bit more advanced, but I think if you just focus on the low volume pullbacks, you'll start to see it. And don't trade it until you see it like 5, 10, 20, 30, 40, 50 times, honestly. Just watch it first, trade your existing strategies, but turn on your volume and notice how the candlesticks match up to the volume, right? All right, I'm gonna keep going here. Oh, that's it. Let's do some back testing. Yeah, so this is a quick class for you today, guys. I just wanted to expand on everything. Oh, sorry, 3:45. But I just wanted to expand on everything and do some quick market structure back testing just to show you guys in real time. Let's see. So let's go ahead and just pick a date here. I don't know. I don't know what happened on July 13th. What's that? Last available bar. Go ahead. Oops, sorry. And do some back testing. All right. So we're in an uptrend, right? We're in an uptrend. We're in an uptrend. We come down, and right here we fail to make new highs, right? We're coming down. We're coming down. We come up again. We fail to break this swing low. I'm sorry, this swing high. We come down. Here's a push up. You know, every push up is a failure to break these highs, right? Up until the next day where we test the highs right here. So let's see what happens. Let me turn it to if this is the next day. So gap up above it. Let's pause right there. So this right here, we gap up above it, and this becomes our new swing high. So we push up, we push up. Pause right there. Let's go ahead and say that this is going to be our new swing high. You got two selling wicks. Well, that right there, that's definitely going to be, yeah, that's going to be another. See how we pushed up and failed right there, right at the volume shelf? So I think that we are definitely going to reverse. I don't think that uh, any push-up is going to lead us to up here anytime soon. So let's say, let's try to get a position here at the volume shelf to take it short. And I don't think it happens. Okay, so we came down. Here's what happened. We held this support right here. And let's say that this is going to be the swing low. Let's see where this push-up leads us. I don't think it's leading us anywhere. Oh, let's see. Wow. I really wanted to push up back up here, but this ends up being the swing high, right? Now, right here, I would definitely take an entry right here because I know that we're at support, but let's extend right here. See, we actually just broke this. There you go. See how this support gets tested? So we'll say this right here is our new swing low. Let's see when this downtrend reverses now. It doesn't. It doesn't. See how all we did was come up, test this, came up, tested this, and the downtrend continued. Now we got to see if this support holds. And it doesn't. So guys, look, you guys see that, right? How the market started giving you clues that yes, we came up here and we broke this resistance right here. I'm talking about this right here. We broke, oops, sorry. We started the day and broke this resistance right here. And then we came down and we started failing to make new highs. You see that? We just, after this high got put in, every swing high is a potential entry for you to catch the reversal. So any of these right here is top picking the market. Now let's see if we can catch an actual reversal back to the upside. Let's see. You guys see that, right? We just keep failing. This is a 3-minute time frame. You guys see that? We just keep failing to make new highs. So I'm not interested in longs until we start breaking some. Here we go. Here we go. So we start making new highs, right? 10 minutes. Start making new highs. This right here becomes our support. And this volume shelf is our resistance right there. There we go. So this right here is starting to give you clues that we might start reversing. Let's go ahead and extend our previous swing highs and see how we react to those. So is the downtrend intact or are we going to reverse it? Let's go ahead and slap another swing low right there. Now look, the market is starting to give you clues that, hey, we started making a series of lower highs. I'm sorry, a series of higher lows. See, bang, 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 bang. Let's go ahead and even draw a fib from here to here, and I bet, yeah, so that right there would be my entry. This Fibonacci from this impulsive leg, that 786, 618 level, that would be an entry long because um, we started breaking all these resistances over here, and we're starting to make a series of higher lows. Let's see what happens. All right, you see that, guys? Came down, held support, new swing low right here. And that right there, guys, on the 3-minute time frame is how you can spot these market reversals happening really quickly. And you don't need to feel like you're chasing. This is a 3-minute time frame. You can take any of these red lines as entry and potentially bottom pick the market. Let's see what happens here. Extend this because as you can see, we broke that right there. Look, we tested. There's that swing high. And you see that just like that, guys. That right there is how you spot a reversal. Came down. Let's see. Let's see what happens here. I got just 10 minutes. I want to see this play out. So we come up here. This is our new swing high. Come down. We held the support. But look what happens. Next on this push up, what we want to see is this swing high break, right? But it doesn't. What happens is we start getting wicks up there. We come down. This support breaks. This support right here. Let's see what happens. It's going to hold. So we're just ranging now because we keep failing to make new highs and new lows. We're just ranging between these support and resistances right here. And we finally break and back to ranging. So this price action right here, this right here is a range market. It's really hard to trade these. See, we just continuously fail to make new highs and new lows. So you really want to see a range kind of break, and then there it goes. Range broke. So yeah, guys, that right there is the clues that the market gives you over and over that tells you, hey, I want to go up now, I want to go down now. It's just these series of support and resistances breaking on a smaller time frame, and that's what starts, the reversals on a larger time frame. Things like this. Again, you trade this on the 3-minute, the 5-minute. If you're a day trader, that's how you spot these reversals. You start coming up into resistance, right? You start coming up into resistance, and we start seeing that, hey, we're failing to make new highs here, or failing to make new lows. This could be a reversal spot. Here's a push up, coming down, and let's see. We really want to see this resistance break now. If it doesn't, here it goes. There it goes. We just broke this resistance. Now this resistance becomes support. We broke out of the range. And that should tell you that we want to keep going up now. Let's see what happens. Oh, we might sell off here. Let's see. We're in this range right here with this is support. And we're ranging now. I believe this is overnight. Yeah, this is overnight. So this is the overnight session. This is I actually trade this session right here. You'll actually notice like right at midnight we'll get kind of a flood of volatility here. Let's see, 23.30, and there it goes. Looks like the downtrend is gonna, or I'm sorry, it looks like the reversal happened, and the downtrend is in. Yeah, see, right at midnight we get a flood of volatility right here. I actually trade this session. This is the session that I trade during work. Um, really, really nice. If you guys can trade the overnight future session, yeah, really good money being made. But that being said, guys, that's all I have for you. Or is there any questions on anything on market structure, on how you can spot reversals, anything discussed here? Anything for me? Let me know. Wow, we just yeah, guys, look at this. I mean, it just tells you over and over what it wants to do. So we just keep failing to make new highs over and over. Bang, bang. And then here's what I mean. A wick doesn't invalidate your short setup. We never had a candle close above this resistance. You see that? We wicked above it, but we just ended up getting reversed out of there. Buyers got stuck. Here's a new swing high. See, if you can just trade these red lines, honestly, you can just trade market structure. But I mean, you gotta be pretty good at that. Yeah, no problem. No problem. I couple this with my support and resist. I mean, I'm sorry, I couple this with my supply and demand, my Fibonacci. This fundamental market structure stuff, that is what's going to serve you most in the long run. Understanding that, not every pullback is a reversal. Not every green candle is a buying opportunity. It's just, bears taking profit or, this or that. Oh, well, we gapped down. Crazy. But yeah, you guys see that? It happens over and over. So again, don't trade it until you just draw the red lines. Draw your swing lows and swing highs if you're an intraday trader, and just see. Watch how it, do it on a naked chart, and just watch how we react to every support and resistance, and you can trade off that honestly. But yeah, that's all I have for you guys. I did record this, so I will post it as soon as it's all done converting stuff. So yeah, thanks for hanging out, guys. Have a good one.